Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Friday, the 28th of January. Starting off with the Moa Minerals, which somebody described on Twitter a few minutes ago, has a perfect bull flag. We have a consolidation here between 3.2 and 4 pence, so an end of day close above 4 should hopefully take the shares up to a technical target here as high as 5 pence. Obviously, there's lots of M&A jiggery-pokery going on along at the moment, so hopefully that will take the shares even higher than that. But we've got 5 pence as the target there, and probably on the stop loss of this whole affair, around the 2.8, 2.9 pence level, which was an old broken resistance line there from early last year. Onto a stock which has not exactly covered itself in glory over the recent past, Advanced Energy. Just checking out the situation here, and what's interesting, I suppose, is just the way the shares are trading just around the bottom of the gap level, so around 0.32. Want a decent end-of-day close above, I suppose, 0.3 or so to then give the shares a chance of at least a dead cat bounce move towards 0.5, I suppose 0.4 or 0.45 might be achievable even if the shares then trickle away after that. Moving on to a stock which has had a rather better time of it of late, Aminex. Here you can see that shares are just breaking out of that rising trend channel that I drew before. So that was around the 1.04 pence level, end of day close or weekly close above that. Should be enough to take us on a journey towards as high as 1.5 pence, which is an August resistance line projection, which would be quite nice. Only back below 0.9 really, or even 0.95 as a stop loss. Would delay the upside scenario. Moving along to a stock which doesn't get much airtime, so maybe deserves some today. Here we've got Arrow Exploration, if I can get the shares to come through. What's interesting here, if it does actually appear, is the way that we've already had in the short time the shares have been on the market a reasonable move to the upside in terms of a sort of a base build, let's say. A gap close buy signal there at the start of the month, which is also useful. Top of the gap there was around 7.5 pence. So above that, looking for further build on the upside. Two rising moving averages as well, the 50 and 200-day moving averages, and that is a plus for the technicals. And guessing here that the shares are in a trajectory between around the 7.9 pence area to up to 11.5. 11.5 maybe over the next 4 to 6 weeks. If you're cautious, you'd wait for an end-of-day close through the recent peak at 9 pence. But it's a decent start there for Arrow in the sense it's never really been below the initial opening price that the stock delivered back in October. Moving on to shares which have had the word bonanza associated with them, and it looks as though we are in that kind of situation for Alien Metals. We had the gap through the resistance line there and the 50-day moving average yesterday, and decent close. Today breaking yesterday's high, which is really the best, one of the better signals around, so above 0.8 pence. Looking for at least or up towards the top of that broadening triangle from back in February last year at 1.5, maybe by the end of March, something like that, but obviously it could be sooner. Stock which is rather less high profile is coming up next, C4X. Here it's interesting that we've had a sort of a U-turn after the bear trap below the 200-day moving average at 37 pence. The longer we stay above the 200-day line, the more the chance of a move towards the top of the broadening triangle from back in March last year. That's currently heading towards 55 pence. So let's say above the 33 pence level up to 55 possible on C4X, and the reason for the relative enthusiasm is the rising divergence line there from in the RSI window from back in the end of August. Relatively obscure stock again, Eco Animal Health. Here the interest is provided by the way that the shares have broken back above the top of that gap down that we had in November, so they call that at £2, and above £2 looking for that May resistance line projection as high as £3.10, maybe over the next 1 to 2 months. This stage really back below the 200-day moving average at 173, really delaying or really questioning the recovery here, which looks pretty impressive at the moment. Stock which you'd imagine would be right in the M&A frame, given the state of the car market at the moment. Got Lucas. Obviously, the shares have had their ups and downs over the recent past, but looks like post-pandemic we're back in business, and the break of that resistance line there from back in, two-year resistance line from February 2019 through the 70 pence level suggests that the shares could actually head as high as £1.40 over the next couple of months. But given that sort of logjam breakout that we've had this week for the shares, one would expect some decent momentum on the upside over the next few weeks. Metal Tiger is the next contender. Here you can see that the shares are bouncing off a line of support there from back in July. That was around 18 pence, and above that looking for 28 pence, backed by a bullish divergence line in the RSI window. Bit of a punchy call, but there's no point doing things if they're not a little bit punchy in this kind of market. Origo is next. Not a stock that appears here very much, and you can see why. Very little volume at all. But it looks like there's been a breakout, and we've held above the 200-day moving average at 0.13. Above that, looking for the top of the rising trend channel from February as high as 0.3 over the next 4 to 6 weeks, something like that. Stock which, again, doesn't normally make an appearance in the Bulletin Board Heroes, but the setup here looks quite attractive. This V-shaped bull flag breakout above the 50-day moving average, they're normally reliable, so an end-of-day close above the initial January peak at 215 could take the shares up to, well, even filling the gap there from July, the top of the gap there at £2.53. If you're cautious, maybe wait for a break of the 200-day moving average at 224, but I think enough has been done here to underline that we are on our way to the upside. Breaking that resistance line there at 212 from July is certainly a help. Stock which has been down in the dumps for much of the recent past, but seems to be ready to move, is Tullow Energy. Here we've broken through the resistance line of that that's been in place, of the falling wedge that's been in place since the autumn. The resistance line there around 2.1 pence, and above that looking for a return to 3.2, which is post-October resistance for the shares. As long as we're above the 2.1 pence area, we should be on our way to recovery. A few stocks to go. First one is Tower, which seems to have revitalized itself over the recent past. Here you can see that shares just look to be ready to close that gap there around the 0.33 level. End of day close above that would be a decent technical signal, as would an end of day close above the November resistance line at 0.35. If we can get through the 0.35 area, then hopefully we're looking towards the top of the channel here at 0.6 pence and the top of the range over the next 1 to 2 months. And only really back below 0.3, really delaying the upside scenario. Stock which I think I missed out on covering yesterday, which obviously doesn't feel like a very good experience, but we have a great signal here with the gap higher for Thor Energy, breaking yesterday's high as well in the 50-day moving average at 0.68. Above 0.68 and the 50-day line looking for as high as 1.1 pence over the next 1 to 2 months. So that is quite an exciting setup on Thor, especially after the bear trap gap reversal from below 0.57. So everything to play for there for the bulls. And there's also a bullish divergence line as well versus in the RSI window versus the lower January low that we had. The last stock of the day is Tertiary Minerals, which also looks as though it's on the front foot. Finally, here we've got bullish divergence line, which has actually been in place since the early part of December. So that's providing momentum in the current recovery. Probably what we want to see now really is a break of a resistance line here from back in June. That's been running, or that is running at around the 0.21 level. So end of day close or weekly close above that. And we could be on our way to post-September resistance at 0.3 over the next month or so. But with that bullish divergence line, you could argue that we're already on our way with a break above the 50-day moving average at 0.19. So aggressive traders may already be looking at it. That's it from me today. More updates over the weekend.